lots of materials for everybody. So I'm Shylea, and Tracy's on with me, as well as Anthony from our DNRC floodplain team. It's the 1st of March, and last week we took the week off to go to AM/FM conference. Anybody got any comments or suggestions or recommendations for next year? Was it good? Mediocre? How'd you guys feel?
It was a really good conference. My only suggestion would be to have it somewhere warmer next year if we're going to have it in the middle of the winter, like Las Vegas, Arizona, Florida.
Tom recommends St. George, my favorite place.
I love St. George. I'm there.
All right. Well, for those of you guys who maybe weren't able to join us, lots of workshops, great information. Nelson was there. It was good to see Nelson and Ronnie and Sarah, and even Stephanie Ray was there. And I was really excited to see some of our first year, fairly new floodplain administrators. When we stopped last time, we were talking about flood insurance and just trying to give you guys some basic background on the flood insurance program. About 2 years ago, FEMA updated the program. It's called risk rating. It was called risk rating 2.0. Tracy, I forgot to look up the new title again. They're kind of rebranding it, and we're not supposed to call it risk rating 2.0, but I think that title will probably stick for a lot of people. So we were talking about, when is flood insurance mandatory for property owners? Well, if the residential or if the property is located in a special flood hazard area, if you've got a government-backed mortgage, the mortgage is from federally regulated lenders. So usually what happens, if you know anything about banking, is those homeowners will go in, they'll apply for a loan from the local bank. The local bank will want to sell it to the secondary market. A Fannie Mae, a Freddie Mac, those are your federally backed lenders. That's how you get your better mortgage rates, and you can't do that without the flood insurance. Also, sometimes certain federal grants or disaster assistance will require flood insurance. I know that was kind of struck me as odd when Red Lodge flooded and there was a badly damaged house, and they're talking about using one of these disaster assistance loans to buy out that property so that it doesn't repeatedly get damaged. It's in a very vulnerable area. They were required to keep flood insurance on that house until it closed, which supposedly the closing is finally going to happen the end of this month, 1st of April. So think about how long that was since we had our June 2022 flood. And then it's a long process to get that disaster assistance. But one of the requirements for it was the property had to maintain its flood insurance. So they've been keeping that flood insurance going on that. Any questions on that, guys, or anything? Just good little things for you guys to know as a floodplain administrator. Moving forward. So again, the flood maps, I always think it's good to get you guys comfortable looking at this. So we see this detailed studied map. The high risk area is that 1% chance of flooding. That's the blue, usually what you see. Some maps may have it slightly different. The orange is your 500-year or your 0.2% chance. That's your moderate risk area of flooding. And then, of course, we have the floodway. And what happens in Montana if you want to put a new structure in the floodway? Can you do that? No. No new structures in the floodway in Montana. You can rebuild an old structure that was existing before your maps, but if you do so, you need to make sure that it keeps the same footprint and some of the same requirements. Okay. Little quiz question, start you off Friday morning. Easy quiz question. When is flood insurance mandatory? So we're looking at this map. We've got this house right here. Is flood insurance going to be mandatory for this house? You guys can come off mute.
No,
No. Thank you, Gary. Right? He's outside the zone AE, outside the mandatory area. What about this tricky little guy right here?
yep,
Half in, half out.
Yes.
Yes, he's going to be required. And these might be good little questions you see on an exam, right? If you're taking the exam. What about this little house? The house is out, the property's in. If you were the flood, what do you think? Maybe flood insurance?
Good idea.
No,
No,
I think this one's kind of tricky. I think that probably the flood insurance company or they would probably want to look at this a little more closely and prove that he's out. But also, guys, remember, whose decision is it truly up to? The lender.
lender.
So the lender might say, hey, he's in a risky area. And they might require it. Because if you were the floodplain administrator on this property, and let's just say they were going to be doing things, would you tell them they need a flood permit? Or would
No.
you tell them they don't?
I guess I would,
depends on where they're doing it.
Exactly. It depends on where they're doing it. So if you were doing education and outreach, my suggestion might be you send them a letter saying, hey, depending on what you're doing on your property, you may need a flood permit, so you should come talk to us. And then together we'll determine that. So
But
I would probably send these guys letters.
but Shylea, could we stop them from doing anything on that structure?
It depends. It depends on probably what they're doing, Ronnie.
And Ronnie,
Because
go
go
ahead.
Trey.
No, remember in the state of Montana that the maps are a guide, that true determination if their structure is in or not is going to be based on that base flood elevation. So for a property like that, it's really too close to call. They're going to
Okay.
have to provide you more information. Does that make sense? Sorry, Shay.
Yes,
No, that's what I want these guys to understand is those kind of properties, they don't get to say, oh, the house is out. They need to be kind of looking at those properties, just like you said, Tracy. Too
okay,
close to call. And then, of course, coming down here to this property, yes, they would be required to have flood insurance. They'd be required to have your floodplain permits. They're in a regulatory flood zone. Okay, little bit more about the mandatory purchase requirements. How comfortable are you guys when you hear people talk about LOMAs, base flood elevations, and lowest adjacent grade? I think I spent the first 6 months on this job being scared to get death of those kind of terms because they were kind of confusing. So I really like this illustration because it kind of helps us understand. Only FEMA can change that flood zone designation. Now, we can go get a letter of map amendment, a LOMA, and that's going to help us remove the property from the requirement of insurance, but only if that property is above the base flood elevation, equal to or above the base flood elevation. And what are we measuring? We're
natural
measuring-
grade,
What's that?
natural grade. It's gotta
Yep,
be,
lowest adjacent grade is what we're measuring. So in this little illustration, where the house meets the natural grade of the ground will be the lowest adjacent grade. And that's what we're trying to determine is here's your BFE. And then in Montana, we have to be 2 feet above the BFE. And so there's our lowest adjacent grade. And that's what we're measuring here. And I'm going to try to do several illustrations with you guys on this so that you get more comfortable, because we're going to be talking about elevation certificates. The CFM is going to have elevation certificates, and you guys need to feel comfortable with what's a first floor height, what's base flood, what's lowest adjacent grade, all those kind of things. How do you get flood insurance? Well, you know, you get them from the local property agents. The most important thing to know is you can do what they call write your own. Go into the private insurance companies and they will offer coverage, which it's usually, like Tracy said last time, a multi-peril, multi-hazard. So it'll cover maybe floods, it'll cover earthquakes, or you can get your flood insurance directly offered by FEMA. What's been a challenge is these private insurance companies, they're in it to make money, right? Most private businesses are in it to make some money. Otherwise, they can't stay in business very long. They don't like it when they have to pay out losses. And after a while, if you have some repetitive losses or they think a property is high risk, they have the prerogative to drop the insurance. And they can do that. And we've seen that happen in some of these areas that have had damages. FEMA will not drop your policy, but FEMA is going to be kind of narrow in their scope of what they offer. They're not going to cover earthquakes, and they're only going to cover certain amounts. To find an agent, you know, and I'll send you guys these slides, but those are places when people come in your office and they're saying, well, how do I get flood insurance? Go to floodsmart.gov or call that 800 number. There is a waiting period when you buy flood insurance. Your policy just doesn't go into effect the very next day. For most policies, you have a 30-day waiting period. So that's why they're always telling you, don't wait till you think the flood's coming. You know, you have to have that in advance. There are some exceptions. At loan closing, if you're buying a house in the floodplain, you need the lenders requiring it, there is not a waiting period. If you transfer, you assume somebody's flood insurance policy. The property owner does. There's no waiting period. If we have new maps coming in and it changes the zone or someone's mapped into the regulatory flood area, no, there's only a 1-day waiting period. And then post wildfires, there's a 1-day waiting period. But for the most part, there's a 30-day. But I just wanted you guys to understand there is some variation in that. Flood insurance covers dwellings, general property, residential condominiums. They're usually in place, like most insurance policies, for a 1-year term. Here's some of the coverage limits. And I like this little illustration. When a community joins the NFIP, there's 2 ways you can join. You can join in the emergency phase of the program or in the regular phase. Emergency is kind of, you came in, you know, quickly, early, and then eventually you convert over to the regular phase. If your community is in that emergency phase, which not many of our Montana communities are right now, notice that the coverage is going to be less than if you're in the residential, or excuse me, in the regular phase. All right. Important to remember, a single family home, manufactured home, condo, 2 to 4 family unit building, that coverage limit is $250,000. We ran into a lot of problems with that with the June 2022 flood, because how many of you guys know many homes out there that you can buy for $250,000 right now? The coverage limits didn't quite coverage the value of what some of the damage was. Something to be aware of. Commercial buildings, $500,000. Non-residential buildings, $500,000. Okay. Those are some coverage limits to keep in mind. You can also insure your contents. So if somebody comes along and says, well, I don't own my home, I just rent, they can still get flood insurance coverage because they're getting contents coverage. And with the regular phase of the program, you can insure your contents up to 100,000. Now, of course, there's lots of little exceptions of what's covered, what's not covered, etc. But these are the general things that you guys need to remember as floodplain administrators. All right, flood insurance risk rating 2.0. I guess we're going to keep calling it that until FEMA updates their materials, right? Because right now these are still their materials.
And it's,
So what does it take in effect? What were you going to say, Trace?
sorry, Shylea, I was gonna say it's NFIP pricing approach is what they're calling it now. But you're right, everything still says risk rating 2.0. But it is NFIP pricing approach.
I should tell Tracy to stop recording, but I always love FEMA because they design really good buses. They just sometimes forget to put the wheels on. So pricing approach is what it's called, but we don't have the wheels yet with the updated materials that say that. So when we're looking at flood insurance and someone walks into your office, you're not a flood insurance salesman, but you should know some basics about how they're rating these premiums for the flood insurance. So a few things you can tell them. It's going to depend on where the building is located and its distance from a flooding source. Ground elevation, for sure. We all know the higher it is, probably above base flood, the less likely that property is to sustain damage or get wet. How it's built, its building characteristics, foundation type becomes pretty important. That first floor height, number of floors. We all know that the first floor is more likely to get wet than maybe if you're up there on the third floor. Construction type, making sure they have flood openings, and they also look at what is built. So replacement value of the building, building and contents, these kind of things. So the biggest thing is where it's built and how it's built. And how it's built is also going to come into play with our elevation certificates. So we'll look at that some more. Flood insurance rating, just an overview of some of the factors. Again, the geographic location, the structural. They also look at the history. Has it been flooded before? Have there been claims on this property before? Is it what they call a repetitive loss structure? And then there's little things that you can do to get discounts on insurance. You can do some mitigation factors. Join the community rating system. That's what CRS is. And we have some communities like Ronnie's community over in Billings. They are a CRS community. And we're going to talk about that in a few minutes, how a community, what they do if they become CRS. But CRS is all about getting those property owners some discounts on their flood insurance. Okay, again, geographic location, they're going to base that on the latitude and longitude. That'll be something that you might put on your elevation certificate. They're going to look at that distance to the flooding source. They're going to look at your elevation and your elevation relative to the flooding source. Are you 2 feet above? Here's a great example of like these relative elevations over here on the side. So we've got the flooding source down here. And we all know that, you know, if you're well above, you're less likely to be flooded out and have damage. I love this little picture because I used to be a realtor for 12 years. And so as a realtor, we were all excited when the house was on water, and we really promoted that as a plus. You know, just stand right there on your deck and you can fish off the deck. And now that I work in floodplain, I would be like, run for the nearest highest hill up here. Again, distance to the flooding source. So good examples there. All right, looking at these structural variables and building characteristics. Building occupancy. Is it a multi-family dwelling building, or is it a single family home? They also really look at the construction type, and there's three, or main types here: frame, masonry, and other. These are some of the structural characteristics that they're looking at when these buildings are built. We were talking about repetitive loss structures. Those are the ones that have had a claim or been damaged before. And as a floodplain administrator, you might be asked about this, especially if you're working with your DES crew and they are updating the regional mitigation plans. And Tracy and I or Anthony can help you get this information. The only one who can tell you about how many repetitive loss structures you have in your community is FEMA, because they have access to the flood insurance information. You might not know if a property owner turned in a claim. Hopefully you do, but you might not. And if you need that information, we can work with you to get it from FEMA. If they are having trouble with flooding and they are talking to you, then as the floodplain administrator, it's your job to assist them and know that they're available, they can be eligible for available grants. And remember, way back in December, Nadine went over with you some of the different types of mitigation grants. You also saw Ryan at our last meeting telling you, hey, on the test, they asked us about some mitigation grants and information. So make sure you study up in that area, because there is a section of that on the exam. To be different types of eligible mitigation grants, again, acquisition, or they can relocate the structures. So that's what I was talking to you about, that property in Red Lodge. They're gonna inquire the property. And when I say they, I mean, it's the city of Red Lodge. They're using funds that are offered by FEMA through Montana DES. They're using a mitigation grant, but it has to be sponsored by the city of Red Lodge. And they're basically gonna acquire that home, tear it down, and turn it into open space. Therefore, no more repetitive losses, because that is the point of the flood insurance program. That is part of the point of NFIP, right? We're trying to stop flood losses and damages, or at least minimize them.
So,
Yes.
this is Tom in Nibley, Utah.
Yep.
Thanks for that. So these, I'd imagine these would have to be willing sellers if this property is going to be acquired.
Yes.
Or okay.
Yep.
This is something that'd be driven by the current owner or something that just can't get insurance because of repetitive loss, and then they'd work with the city or the community to acquire that through grants or such.
And Tom, that's a really good point that you're helping me make. So that particular homeowner, they were scared to death to go back in their house. Her husband almost lost his life when the flood happened, and they were an older couple. They'd lived there for a long time. And when they talked with us, they seemed very scared to try to rebuild or live there again. And so this was a nice option for them, because think about it too. If you try to sell that structure, okay, it was heavily damaged. So they either had to repair it or tear it down and then try to sell the lot. Well, are you gonna get the full market value for that lot by a new buyer? Or is the new buyer gonna be like, well, it flooded once before, I don't know if I'll take my chances? Partly too, the community wants to get that out of there because it was in a dangerous location. And so when those things happen, you got to think about your responders. They're putting their lives at risk to go in there and try to save somebody too, if that happens. So yes, there usually has to be a willing seller. And in fact, the property next door would have lined up really good with this acquisition, but that gentleman didn't want to sell. And so that the neighboring property isn't a part of it, but it would have made a really nice park if they could have had both of them. So,
Well, thank you very much. I appreciate it.
yep. Elevation, demolition, dry flood proofing, these are all things that when we talk about mitigation, these are things that people can do. And again, just like Tom or Gary did, feel free to jump in and stop me. So what constitutes a repetitive loss structure? And if you guys are taking notes for things that I may see on a CFM or I'm likely to see on the CFM, if I were you, I would star this. What's a repetitive loss structure? Well, NFIP insured, and it has 2 or more flood losses of $1,000 or more over a 10-year period. So that's what repetitive loss is. And if you sometimes see it, they'll just go by the little initials RL, repetitive loss structure. So if DES comes to you and says, I need to know the repetitive loss structures in our community, you're going to be like, oh, those are the ones with 2 or more flood losses for $1,000 or more each in the last, 10-year period. And it doesn't have to be the last 10 years. It can go all the way back to 1978. And generally what happens is once they have those losses, just like with your car, if you have a car wreck, your premiums are going to go up. So you got a repetitive loss, and then we have severe repetitive losses. What's a severe repetitive loss? They have 4 or more losses of $500,000 each. Okay. And again, the same 10-year time frame. Oh, hey, Tom, that reminds me of something I wanted to tell you. Is when they're buying those properties out, they're also buying them out for the market value. They come to some established market value price, whether it be an appraisal or things like that. So when those mitigation acquisitions happen, it's usually at a market value. Okay.
Thank
sorry.
you. Yeah, no, the reason I asked was I didn't know if FEMA was expecting the community to use eminent domain or anything. So I appreciate the dialogue.
Hey, Shylea, I will say, this is Tracy, Tom. There are some communities that have that power to use eminent domain. It's really difficult, but there are communities that see a lot of flooding that can put that in place, but that's a very, very specific community process. But like Shylea was saying too, on the market value, the property she was talking about, those folks lived there for a very long time. They didn't even realize how much their property was worth when we were talking to them. They were probably 400,000 under what we even were talking to, like what they thought in their mind it was worth. So for them, it was helpful, but they were older and they had 2 fractions of the family that were kind of trying to talk them. Some were talking them into like, yes, take this deal. And others were like, no, we don't want to lose this property. So, there's a lot of emotion that's tied into it. But the one thing I did want to bring up, Shylea, and I'll turn it back over to you, is that when we're talking about repetitive loss properties and severe repetitive loss properties, there's a lot of mitigation funding that's geared just towards these types of, or these structures that fit this criteria. There's a lot of funding that's out there for that, because that's how important they think it is to really get to these structures to mitigate them, whether it's the acquisitions or getting them to elevate their structures. Sorry, Shylea.
No, I think that was very important to make. And in fact, we saw that on Friday morning at the AMFM conference. There was a whole workshop, talk on these severe repetitive loss structures and what they call the SWIFT funding, right? The mitigation funding to try to help with these types of properties. It's kind of hard for us to imagine sometimes in Montana, but the one gal last week was talking about Louisiana. And when she was working down there, they had 2 major flooding events within 6 months of each other, where, these homes got flooded, and then 6 months later they got flooded severely again. And so, maybe it doesn't always apply in Montana, but we definitely have, counties with repetitive losses structures. And now we have counties with severe repetitive loss structures. We used to not have very many. So this is a really important concept to understand. And again, I would star this because I think you'll see it on a CFM. So here's a good little comparison of the two. Repetitive loss structure, it's got flood insurance, NFIP insured, and you've got the 2 or more flood losses for 1,000 each. And then if you're over here on the right side, right side, flood damage, by a single event, it's going to cost you 50% or more of the pre-flood market value to restore it. Those kind of things. So repetitive loss, substantial damage. And when you hear substantial damage as a floodplain administrator, you immediately start thinking, what? I need a floodplain permit, right? And if it was pre-firm, it needs to be brought into compliance and brought up to the new regulatory standards. Those are things you guys should start thinking about. This is also an important little concept that happens when you get flood insurance. This increased cost of compliance coverage. And basically what that is that's an additional, just a little additional part of your policy that allows you, it kicks in and it'll give you $30,000 to help you cover mitigation measures. So let's say you need to go in and put in some flood proofing or some flood vents. This little $30,000 will help you cover that. It kicks in and you become eligible for the ICC if your building is declared substantially damaged, meaning that it's going to cost more than 50% of the market value of the home to make the repairs, or if it's a repetitive loss by a flood. That's when ICC will kick in and you'll have this made available. Now, Tracy, can you help me with this? Because that 250,000 max that we told you guys, it would make sense that you would think, oh, the 30,000 would be over and above that 250, but that is not how it works. The 250 is a max and it will include your ICC. Does that make sense? It's a little bit confusing, but you cannot exceed more than 250,000 maximum flood insurance coverage for your home, even if they give you the cost of compliance. Mitigation solutions with ICC, there's a little acronym called FRED. So they'll help you with the flood proofing. They might help you relocate that home or that building to a new site. They'll help you elevate or demolish the building. That's what that extra 30,000 can be used towards. So FRED, flood proofing, relocation, elevation, demolition. what's your role as a floodplain administrator in the ICC? You're gonna make the substantial damage determinations. You're gonna assemble a team. You can call us at the state to help you if you need us. And you'll go out and you'll look at these damaged structures and you'll be like, okay, what's going on with the foundation? What's going on with the electrical? What's going on inside? What percent damage is it? If it's off the foundation, it's probably 100% damage when it comes to the foundation. And you're going to make these little evaluations. You're going to compare it to the market value of the home, which we're kind of lucky in Montana because we all know the Department of Revenue does an evaluation that's available publicly. That's one way you can get it, or the property owner can bring you, an appraisal, and you're going to make those substantial damage determinations. And as you can see, those become really important because that's going to affect their insurance. It's going to affect the repetitive losses later on. So, important role for you if your community is flooding. What else do you do? Well, you might talk to them about mitigation options. You'll help package those ICC benefits, information. You'll coordinate, issue building permits if that's something your community does. And, Montana doesn't really do much with certificates of occupancy, letting you back in the buildings after flooding events, but other communities do. They put little cards on the buildings, and the colors of the cards indicate if this is a building they can go back to for re-entry, or this is a building that's too heavily damaged to have people back in it. So, mitigation discounts. This one we see a lot. Flood openings. How many flood
Yeah,
openings?
I'm sorry.
Yes.
I've got a question on the ICC.
Sure.
And determining whether or not a structure is damaged. If an insurance company, say a house catches on fire, an insurance company says, okay, we're gonna pay out, we consider the house, destroyed, and we're gonna pay that out, okay? To me, that would mean it's substantially damaged without even having to look at the structure. Is that true?
I'm not an insurance agent. Tracy, are you on? Do you have
Yeah.
any thoughts on that?
Yeah, unfortunately, they're two separate processes. So that most likely, if you're seeing that a structure, if they're getting insurance saying that their structure has been, they get the full amount, the structure has been substantially damaged, it should match up with the floodplain administrator's determination about substantial damage, but they are two separate processes. And
Right.
you are going to have to, as the floodplain administrator, you're going to have to go in and take a look. Plus, there may be things that might not make it. Substantially damaging a structure is very difficult. So they may have up to $250,000 in damages. Like we said, that doesn't cover a ton, but with the houses as expensive as they are right now, but you may not find that it's substantially damaged. So it really is, you really got to go out there and follow that substantial damage estimate using that tool, because that is what they are going to use for the ICC to kick in. And when Shylea was kind of talking about, even with ICC, it's kind of, it's hard because, what was going to say, you can't exceed 250,000 max, or 500,000 if it's a business. Even with that ICC, that's because a lot of these, most things, they depreciate. And so you might not get that full amount, but with that ICC, they most definitely will. But I hope you kind of understand, you may find something that's not substantially damaged, but their damages may exceed that 250,000. Does that make sense? Was that Gary that asked that?
Yeah.
And so our question is we've got someone now that just recently purchased a house that was, by all indications, substantially damaged. I mean, if the house was paid off, you know, they said, okay, well, we're gonna pay it off. So this guy buys it, knowing that it's in the flood, flood, not floodway, but the flood fringe. And there were some other issues with it as well. When they built the house, they didn't build, when they applied for a floodplain permit to build it there, they didn't build it in accordance with the requirements that we gave them. So now this person is wanting to buy the house, go in and rebuild it and bring it back up to specifications. So that's why I was wondering, you know, I mean, if it's already substantially damaged, I don't know if that he can, you know, I don't know. I'm just really confused on how he can rebuild the house that was burnt down, and we're obviously gonna have to be listed as substantial damage, so 250,000, I'm not sure. The insurance
Well,
company,
and if that, so keep in mind, Gary, if the house burned down,
Yep.
flood insurance isn't gonna cover it.
right, you're right, I understand that,
His homeowner's insurance will cover it.
right,
house
and they
has-
did, but now he's trying to rebuild the place,
And he's got
Right.
a permit for that.
right, and he's gonna need a permit to do that.
Yep.
Yeah,
It's just real,
Did you
so
guys,
but that's different than increased cost of compliance, because that's gonna be related to repairing after the flood damage.
yeah, it's
Right
only
now,
for
if he's
flood.
rebuilding, he just has to rebuild with, you know, with the, following the floodplain regulations of your community.
right, okay, all right,
That's a good point, Shylea. ICC is only for when flood events occur. So in that case where the structure burnt down, ICC wouldn't be available. Had that structure been substantially damaged because of a flood, that's when ICC can kick in.
But again, it's only gonna cover up to that max of 250.
50,
And-
right, okay,
Right. And then the other thing's gonna happen is all you're doing as the floodplain administrator is you're going in and you're gonna make these key little determinations. Was it substantially damaged? In your floodplain regulation opinion, it was, okay? So that's gonna start opening some doors for them to get mitigation and stuff. But as far as how much flood insurance money they're gonna get, that's gonna have to do with the flood insurance adjuster. That has, you don't have anything to do with how much flood insurance money and indemnity payment they're gonna get. You're just over here for floodplain regulation purposes and your requirements. In the floodplain world, we considered this substantially damaged. And because you did, it's gonna open up some doors as far as mitigation funds. But it's not, you have nothing to do with how much is paid out to them in a flood insurance policy. Right, Trace? That's a good thing to mention.
Yes.
Does that help, Gary?
absolutely, thank you.
Okay. All right, we're almost done with the death by PowerPoint, and then I've got a couple of little videos if you guys want to watch them. But I do want to get to just our next really important thing here. We were talking about these flood openings. So in a house, when they build a house, we have been seeing sometimes that they're building in the flood fringe, or maybe they're even putting their house back on the same footprint in the floodway. We're seeing that happen too over there in Stillwater and Carbon counties. They're in that same footprint, but as they're building these houses, they're not putting any flood openings into the crawl space. Because can you put a basement in? No, you shouldn't be. Not if you're in those flood areas. But you are required to have these little flooded openings. So what's the criteria? Because when our floodplain administrators have had to go back and tell them, you need to have flood openings, they're like, okay, how many? Well, you have to have at least 2. And it has to be no higher than 1 foot above the adjacent grade.
Hey, Shylea, on that adjacent grade, I want to say, this is kind of confusing, but it can be no higher than 1 foot above either the exterior or interior adjacent grade. And they don't always clearly specify that, but I just wanted to clarify that.
Okay. Do you want to repeat it again, just so it sinks in?
Yep, so it's no higher than 1 foot above either the adjacent, so the outside grade, that lowest adjacent grade, or the interior grade. So sometimes you'll see Montana will require you to have those openings even if that lowest floor is at base flood elevation, you need to do that 2 foot of freeboard. So maybe you have a crawl space, you can have that opening be no higher than 1 foot of that interior grade. And we see that a lot here. So
And do you guys see that in the little illustration over here on the right? Here's your interior grade floor that she's talking about. There's the exterior grade. And see how that opening, it has to be no more than 1 foot higher. Right there. So there's a good illustration of what Tracy's talking about. And then there's this little mathematical calculation that you need 1 square inch of opening per 1 square foot of the enclosed area. So if I was going to pull a math example for you, I'm not good at math quickly off my head, but 1 square inch of opening per 1 square foot of enclosed area. So they like to give you, in a lot of examples when you're working through studying for the CFM, they will give you mathematical examples of this. And they will say, hey, if it's 1,000 square foot house and the little square inch opening is 10 by 10, how many openings do you need? Am I right? You'd need 10. I'm doing math off my head.
Need 10, yeah.
Yep. So, okay. You'll also get some flood insurance discounts if you elevate your machinery, your hot water heater. You know, notice here in this picture, the air conditioning unit is up there above at least as high as the first elevated floor. So elevate your mechanical equipment, get it out of where the waters can get to it, damage it, that kind of stuff. That's another way to get flood insurance discounts. It's also just good building practice. Another way to get discounts, and I promised you we would talk about this, is with the community rating system. It's a voluntary program. It's part of the National Flood Insurance Program, and it provides incentives to communities who administer floodplain programs that exceed the minimum standards. And what's cool about Montana is we already have floodplain regulations that exceed the minimum FIP standards. Tom, are you listening? I'm giving you a chance to come off mute here. In Montana, we require that structures be built 2 feet above the base flood elevation. And if Tom's still on with us, what's the Utah requirement, Tom?
1 foot.
1 foot. So he's with NFIP standards, 1 foot above, but we're 2 feet above. So Montana, all of you guys would have a really good chance of being eligible for the community rating system because we have to enforce the higher standards. So that is one cool advantage for Montana communities, is we're already doing it. So maybe, you know, if you can get an extra discount for your property owners, why not? Well, we have, I think, 11 CRS communities in Montana. So why don't we have more? Well, of course we don't, because when you do this community rating system, you're gonna have more things to administer to, right? And more things to keep track of. But it is nice because it is a guaranteed way, especially under this new updated flood insurance program, to get discounts for your homeowners. Let's just talk about the community rating system for a second. So they're going to come in and they're going to evaluate you guys, and they're going to say, all right, Montana, you're already running a program that's above the NFIP standards. So check, we're going to give you some points for that. And then they're going to look at you and they're going to say, well, are you doing education and outreach? Are you telling people that they're in the floodplain? What are you doing to let people know how to manage their flood risk? If you are, they're going to give you some points for that. Are you, doing mapping? Is your community mapped? Are you following the regulations? Are you trying to do things within the community that's going to minimize flood damage? Do you have a warning response system? These are things they're going to come in and they're going to evaluate your program. And right now, the CRS representative is auditing some of our CRS communities, and they're going in and they're evaluating their programs. Those are things that they may ask you to do. Again, the rewards for doing all these extra measures are your community gets those flood insurance discounts. Now, it becomes pretty important to a community like Miles City that has like 800 and some people, in the floodway. It becomes important to a community like Three Forks that's getting mapped in. And they originally were going to have like 900 new homes brought into the floodplain. Now they're doing some other things to try to mitigate that. But when it hits your community like that, these are things you can look at as a way to try to help your property owners and your stakeholders. They're going to come in, and as they evaluate you, they're going to have a class system. So everybody comes in, there's those points I was talking about. Everybody comes in at a 10. And you'll see everybody being at a 10, there is no premium discount. But if you can do a little bit more and you're rated a class 9, then you might get a 5% discount. Or an 8, a class 8, you'll get a 10% discount. Gary, correct me if I'm wrong, but Cascade County, you guys are a class 7, right?
We're an 8.
Okay, you're an 8 and Great Falls is a 7. So there's a little bit of that difference. I was trying to remember which one was which. I think class 7's the best we have in Montana. Tom, is your community a CRS community in Utah?
No, Nibley isn't, but my previous employer, Logan, they participated in the CRS and they were at a 7. And I think it was one of maybe 2 others. So there
Okay.
might have been 3 total in Utah.
Yeah, you have to start doing a lot to go above a class 7. There is one community in the United States that is at a CRS rating of 1, and they're down there in Oklahoma. They are a CRS 1, and when they got that classification, people were really making a big deal out of it because
There's no water in Oklahoma.
I think it was Tulsa, which is on the river. And having grown up in Montana, my first job out of college, I had to draft corn on a barge in Tulsa, Oklahoma, standing on this barge that was headed down to New Orleans. And I remember thinking, I didn't even know there were rivers big enough in Oklahoma for that. So I get you. How is CRS a beneficial option? Again, lowers the flood insurance premiums is its biggest thing. You're going to do more education and outreach so the property owners have increased knowledge and they can take action to protect themselves. The floodplain program is administered to a higher standard, which in Montana we already do. But if you were in Utah with Tom his community would have to start administering to, you know, something maybe higher than 1 foot BFE. It enhances the public safety. It provides a benchmark for evaluating effectiveness of your program. Technical assistance is available, and the communities have an incentive to maintain and improve their flood insurance programs. The other thing, and I promised you guys this all along, we would talk just a little bit about elevation certificates, is usually when you are a CRS community, they will require elevation certificates. Just regular permitting, sometimes we need elevation certificates. And also now with the new flood insurance program, lots of times elevation certificates are submitted. They aren't required anymore, but they are submitted as a way of getting premium discounts. So what is an elevation certificate? You'll need to have one if you're doing a letter of map amendment. Let's look at it. So it's a way of formally determining a building's elevation. It's usually filled out by a surveyor or an engineer. And when you're looking at this, you're going to say, hey, building elevations, what are they based on? Is it the drawings, or is it the building under construction, or is the building all finished? I also want to note something here. They just last summer updated the elevation certificates. The last time it was updated was 2019. You guys need to make sure if you get an elevation certificate in, it's on the new 2023 form. Okay, don't be accepting old elevation certificates. They're going to ask you, you know, what's it based on? Remember when we talked about NGVD or 1929 or NAVD 1988? That was stuff Perry talked about. You're just going to check which one is your maps going back to. And then they're going to start taking measurements. The surveyor is, and he's going to say, okay, what's the top of the bottom floor? What's the top of the next highest floor? What's the bottom of the lowest horizontal structure member? Remember, that's a V-zone thing. We went over that. There's our lowest adjacent grade, the lag, or the highest adjacent grade to the building. And then what you're going to do is, it's not in here, it's in section B, which I'm sorry, I didn't have time this morning to get a screenshot of it, but you're going to compare those measurements to what? The base flood elevation, right, of that building. So what is the base flood elevation? And once you make those comparisons and you subtract, you know, lowest adjacent grade to the BFE, that's how you know if he's 2 feet above or 1 foot above. That's how you know the requirements are being met. And with that, yes.
Yeah. Back to the
Yes.
vertical datum. I don't know, I can't stress enough the importance of having that proper vertical datum that you're working on. We had a project because the 29 and like Utah State Plain, there's almost a 3-foot difference in those datum. And we actually had a project that this guy thought he was doing it all right. They actually constructed it and he was 3 feet low. And we didn't realize that until we had another project that interfaced with it.
Sorry.
In
it
risk
won't
rating
shut off.
2.0 rating variables, in risk rating 2.0.
I can
rating
take a hint,
Part
Shylea.
No,
We had a
I'm
discussion about
sorry.
how-
I
No,
can't
I'm
get
totally
this to
kidding.
shut off for a
We
second.
ended that video by
What I
reviewing
wanted to
6
say,
foundation
guys-
types. Now let's move
What
from
the
the
heck?
foundation up to the first floor
The
height.
desk, there. Okay. I am looking at our time. It's 10 o'clock.
Shylea, we have a hard stop at 10. I'm sorry.
I know. That's why I'm stopping us.
Yeah.
So what I'm going to do, guys, is we were to the point. I had 2 short little videos, one on elevation certificates and first floor heights. One is less than 5 minutes and one is 8 minutes. I found short ones for you. I'm gonna send those out to you to watch on your own. In summary with the slides, we are at the end of this. Next week, Brent is gonna be with you. And he's gonna be talking about other regulatory standards. We're gonna have Brent Zundel, regional engineer, for the next 2 lessons. And I highly recommend you guys watch these videos if you got 13 minutes. Okay, anything else? We have another meeting at 10, so we got to wrap up here today. But send me an email or anything. Thanks for your time, guys, and for being with us.
Thank you.
Thanks, Shelley.
Okay.
Thank you.